declarations of conflict of interest as we go. And I'm now moving on to item 4, page 3. So can I have confirmation of the minutes, please? Can I have a mover for that? Jack, and a seconder. Penny, thank you. Anything wrong with the minutes that anybody can find? No? Right. All those in favour? If I take a leaf out of Penny's book, if I'll just ask for anybody against, that would be easier, wouldn't it? Thank you. So we're moving on to item 5, reports. So we're starting off with Mount Tiger on page 7. Oh, Ian, you're right down there on our map, you're bottom of the middle. So thank you. Right. Would you like to say anything on your report, please?
Yeah, I can just quickly couple of things. I could quickly just highlight a few things. It was a relatively quiet year on the forestry front. Year end 30 June 2021. There was no income from harvest. The next harvest is in 2023, which is a very small area, which basically offsets our annual expenditure. But I guess of significance is we then carry on with about a 60 to 70,000 deficit for the next 3 or 4 years. And we start the second rotation in year 27-28, 2027-28 that is, and it'll go on for about 7 to 8 years, generating about 8 to 9 million of revenue net for the council. So we're really just in a holding pattern at the moment for the next few years, basically with maintenance and protection. With the exception of a small area that we replanted last year, and I can say that that has taken off really well this time, and I was up there last week and looking really good. As far as the year-end results, all forestry operations were completed as per the budget and in line with the management plan. The re-establishment, tending, forest operations are all done under budget. The main issue that we've discussed previously was a result of the July 2020 storm, which resulted in road slips, road repairs, and also a culvert replacement, meaning we had to spend about $32,000 on forest maintenance compared to budget of about 16,000, so we're about 19 overspent. Forest health, fire protection, recreation insurance were all done as per the management plan objectives and criteria and all met. The only thing of issue was that we did have money in the budget for the KiwiLink community pest protection work, and we are looking to be a bit more proactive about the management of the native areas, about 150 hectares that are within the Mount Tiger exotic forest. No spend came through on that. There was work done, but it didn't come through to the forestry account. So that's one thing I think the committee might want to look at pushing along with NRC biosecurity in the next financial year, is just to get a stock take. I've been talking to Don about it, but we haven't had much traction yet of those native areas. I think the committee, when we did that field visit a year or two ago, it will be good to get a bit of a handle on those native areas and just move to actively managing them. So the final total year-end result was 4% under budget, which I was pretty pleased with. Mainly a result that overspend was counteracted by the underspend on forest operations and the $10,000 we saved on the KiwiLink project. The forest valuation, forest tree crop was valued at 3.8 million, up 16.8% as a result of forest growth and reflecting the stronger log prices. And of interest as well is that the carbon units, the council has about 17,500 NZU carbon units, which it's holding as a result of the allocation for pre-1990 forests some years ago. They were revalued at the valuation date 30 June back. They were at 760,000, up 200k on the previous year. When they were valued at $32 per unit, they went up to 43. But of interest and for you, Simon, is that the current carbon price has gone up to about $64. So we've had another 350k on the carbon value. So they're worth about 1.1 million now. So certainly a gift that keeps on giving. Unless council needs the money urgently, they should hold on to those units, because every indications are that the carbon price is going to keep increasing. So that's all as far as the budget report goes. I'm happy to take, all in all, the forestry is in a pretty good space at the moment. I did want to make a quick comment about ongoing management, but I'm happy to take any questions firstly about the budget specifically or the report specifically.
Thank you very much. Yeah, good to see you there. Good to get your report in person. Brilliant. And I think Jack's got a question. And Penny. So go to Jack.
Kia ora, Jinx, lovely to see you. Two small matters. One, when we had some public consultation for the representation review, we had a little stall at the farmers market, and an individual, a landowner, came up and spoke, and I didn't take his details because a staff member there took it, Ben Lee. But he lives at Aroa River Road, and he said there was a slip a few months before and carried about several, 50 or 100 metres of fence away from the mutual boundary between our forest and his land. Do you know, is that part of the work that's been done?
No, it's not. In recent weeks, I've had contact from two adjacent landowners who are up Aroa River Road, and one of them I've already come to an agreement with, and Phil was involved in this, where we're working with him to repair the fence. He's going to do the works, and we're going to supply the materials, and so that one's under control. And the other one is a case of going up to have a look at it, and that's one of the items that I discussed, which I'll get to in a minute with the management, but under control.
Yeah, clearly got it in hand. The other one is, I was driving up there about a month ago, and I noticed on Mount Tiger, there's a lot of gorse on our side of the boundary and also on the District Council's roadside. I did send a little note through to Malcolm about getting staff on it. Do you know if that's part of the weed and pest control work that's being done or scheduled to be done? Just, it's not severe, but it's not a great look for the general population driving past.
Yep, that's another one that I discussed last week when I was up there with Northern Forest managers. So we're looking at that. It's a difficult one in terms of the gorse on the boundary, because as you'd appreciate, the whole forest is basically, when it comes back after re-establishment, comes back in pretty solid gorse and pampas. So yep. Yeah, what we have done, and we've probably made matters worse, is by having a setback from our fence to where our trees are planted. The first rotation was right up to the boundary. If we leave a bit of a setback, then that just creates open space, and that's colonised by gorse and pampas. But we certainly can make the fence line clear up, but we just need to be careful that we don't compromise the tree crop as well.
Yeah, good. Yeah, I just, the Regional Pest Management Plan says that all landowners shall keep land free of gorse up to 10 metres back from any adjacent boundary where the adjacent landowner is also controlling gorse. So it may or may not be an issue here, but still it's not a flash look. But of course the roadside is actually the responsibility of the District Council, so they may need to be reminded, because there's quite a lot of gorse on the roadside rather than in our land. All in all, it doesn't look too flash. So it's nice if we not only comply with the law, but set a nice standard. Thank you.
I have discussed that with Northern Forest managers as an action item.
Thanks, Jack. Penny.
Very comprehensive as usual. Just a couple of quick questions. So
You have to, it's a bit quiet, Penny.
Oh, sorry. I'll turn my volume up. Maybe that'll help. I'll speak a bit closer. So just wanted to support that work on our native 150 hectares or acres. How do we make that go faster, or is that all in hand?
I'll address that, Penny. I've just had a word to Bruce about it, and he's got it. He's made a note about it, and he might want to comment on it.
I'll be talking to Don about that, and then also I think we'll potentially bring something back to the committee about how we actually fund that work.
Okay.
Maybe to be funded out of this equalisation reserve.
Yeah, Mr. Chairman, there is $10,000 annually in the budget for this KiwiLink community pest work, which was part of the wider sort of animal and pest control throughout that project and throughout the link right out to Whangarei Heads. But we haven't been using that money to date fully, and there's certainly some provision that we could use that budget to certainly do a some sort of evaluation of the native portions within the Mount Tiger estate to come up with a plan of what we actually have, so then we can work out what we actually need to do with it to enhance it or maintain it at least. So there's already money in the budget for that. It just needs to get a bit of a kick in the pants.
Thank you.
And just quickly, so our natives are in the ETS?
Sorry?
Are the native trees in the ETS?
No, they're not. They're not part of the emissions trading scheme. Native forest that existed as pre-1990 forest, so it was effectively
Okay.
excluded.
Okay, but any new stuff that we did would be, yeah, okay.
Yeah.
Thank you. All done.
Thanks, Penny. Stuart.
Just a quick question, Ian. Do we insure our forests for their market value?
Correct. So we carry annual insurance for the value of the tree crop, but only for fire damage.
Okay, and
we don't cover for wind loss because it's generally prohibitive in terms of the cost versus the risk.
Yeah, and does that, is the trend around your insurance premium on that? How's that been trending, Ian? Just in terms of the way insurance companies are now treating these, the values, so to speak.
Yeah, the last couple of it got pretty high about 3 years ago, but the last couple of years we've had pretty competitive quotes, so it's actually dropped back a bit. So it's in a reasonable state at the moment.
Thank you.
Right, no more questions. Ian, I just want, look, I'll say first that I do this ride from over Mount Tiger. I think I've told you before. And when I get to the forest, it's great to have a look at. I love looking at it, but it's also the end. It's the 12th hill, and there's only one hill left after that. So I'm very pleased to get that far. So it's awesome. And I always enjoy your reports, and I always like going out there to have a look. So thanks very much. So that's about a third of the forest native block, isn't it? 300. What's that, Ian?
Yeah, if I could just, there's one more thing I'm just going to cover off in terms of the ongoing management. I've effectively put everything in place now. Northern Forest managers are taking over a lot of the things that I used to do in terms of the on-forest activities. We've done an extension to their contract and increased their services under their contract, that they're stepping up to do the protection and maintenance and have a bit more of an overview, and also do regular checks on the forest. So I had a handover last week with them on site, and we spent a few hours driving around and going over things. And that's where we've covered off the ongoing works in terms of those 2 slip areas with adjacent owners, also the gorse on the boundary fencing, and we've also covered off the work program for this year. And so that's all set up to carry on. So I've handed over to them, and I've also done a download of files and documents. So I've made copies, and they've been now passed on to Nicole and Phil from the council side, and also Northern Forest managers have all the information. So effectively, I've made myself redundant as of the end of this meeting.
Oh, Ian, all right. Well, thanks very much for all those years. It's been awesome, and I'm sure if anybody else would like to say anything, they can. But thanks very much. You do a fantastic job of handing it all over, so that's awesome. And I hope things go well. Yeah,
no, I think we did all that last week. So no, I'd just like to say thank you to the council. It's been a great to work with numerous council members and committees over the last 20 years, and a few CEOs and several council staff as well, and it's really been enjoyable. It's only been a small part of my work, but I've held on to it for that time because it's actually it has been really enjoyable, because it's good working with people who are like-minded and let you get on and do what you need to do, and are supportive for that. So yeah, I really appreciate it, and I wish you all the best.
Thank you. Thanks, Ian.
Okay.
Same with you.
I will sign off. Okay, cheers.
Thanks very much. Bye. Right. Okay. Well, that slowed me down a bit. So goodbye to you.
Rick, that will be minuted, will it? All the
What's
things
that?
you said.
Yes,
So any further
Yep.
contact?
but,
any
yes,
further- oh.
okay.
So any further contact with Mount Tiger, we go to, is it Northern Vegetation or whoever?
No, it's Northern Forest Managers.
Yeah, so we'd go
They're
direct to
very
them.
familiar with the forest. They've been doing it. They've been working with Ian hand in glove for many of these years. Yeah.
And our new contact is a gentleman called George Dodds. So
I was gonna ask, yeah.
He'll be Ian.
Okay, Penny? Right, thank you. So item 5.3, sorry, 5.2, page 14, responsible investment report. And going to, Simon's got his name on that, so I'll let him speak to that. If he wants
Thank
to.
you, Chair. Yep, it's a fairly small, brief report with a main message that if you look at the graph, the main message is we're trending towards a more responsible overall investment portfolio, as we've spelt out in our SIPO. In over 5 years, we wanted to move to be more responsible investors. This shows that the renewable energy is increasing, improving, and the not so responsible investments are decreasing. So good news on both fronts. And I don't know if, Jonathan, you want to add anything further?
No, that's the key message, Simon. I agree. I could tease everyone and show that your investments in alcohol has actually bucked the trend, but it's a whole 1% of your total portfolio. So I don't think we even need to mention it really. But the key is to see the trend in all these areas and just keep an eye on things. And as Simon says, I think it's going very well.
Thank you. Now, I know there are a couple of questions. I've just, two things. We didn't actually sign off Ian's report after that, Penny. So is anybody against signing off that report off? No. So I've done that now. And we didn't move and second this report. So could I have a mover for this, please? Jack and Penny, a mover and seconder. And then, now questions. Jack, you had a question? No? Penny? Yes.
Going down.
We can't hear you, sorry.
Sorry, except that the trend is going down. Just looking at Key Street income though, and wondering if they weren't as they were, we would be even further down on our investment in these products. So is there a plan there, Jonathan, to get to change that? Because I see we've got all up in those I guess non-responsible investments, about 11%, 11.5% of Key Street is in those.
Yes, Penny, it's a little bit tricky. We are trying to sell down Key Street. It's a very good income fund, and it's got some PowerCo and some Z Energy bonds. So it's not actually actively involved in, it does have a little bit of extraction, but most of it is in the distribution of fossil fuels. And whilst we're selling it down a little bit, the problem we have is that that's the most defensive of all the products run by council. So at this stage, we're reluctant to sell it out completely because they actually have a very strict and a very good ESG policy. We've actually been into their offices and argued with them and thrashed this out with them for an hour and a half. And although the numbers for them look bad, they're unusual in the sense that these are bonds, not equities, and as such, the exposure to them is high because there's relatively few corporate bonds available to any investment managers in New Zealand. And as such, we're sort of stuck with it. But as I say, the plan is to keep selling Key Street down, and we have been doing that a little bit progressively.
Okay, and that's because of this type of
Yes,
investment? Yeah.
exactly. Yeah.
Thank you.
Just to
Stuart, thanks, Penny.
Just a quick question on, I noticed BlackRock has got is that a not applicable or a not available?
It's not available.
So is that something? Yeah, is that a problem in the sense that if fund managers not telling us, is that an issue?
Well, you know how big BlackRock is, right? So effectively, it's the fact that we're dealing with their Sydney office, and I can't get over there to go and kick the tires. It's one of these frustrating things. I mean, I've actually met the guy who runs this product, and he's very good, and so has one of our colleagues. It's one of these difficult ones, Stuart, where with lockdowns and everything else, it's just a little bit hard for the tail to wag the dog.
Right.
But
any further
I
questions?
guess my point is more towards, and I do know that the mood of council is to walk the talk of our SIPO, and and the trend is at the moment really good, and I completely understand your points, Jonathan, about it's so difficult to extract out of varying assets, and the definition of some of these investments, especially, I mean, take alcohol. If banks are having problems at the moment, do they invest in, or do they lend to the foodstuffs of this world who sell alcohol? I know it's really difficult, and I totally get that, but I'm wondering more from a governance perspective, that if our SIPO is pretty explicit about that there are categories that we do not want to invest in, can we really, notwithstanding that they're big and they're being they're a great fund manager, but the fact they're not disclosing anything to us, I mean, is that a problem for council?
You want me to answer that one, Jonathan?
Well, I can't, obviously.
No, that's why I brought it up, because I thought it was, and I feel like it's one of those philosophical questions that only council can answer.
Thank you. You're saying below Malcolm.
Got a comment, Rick?
That's right.
Yeah, sorry, Chair. I was sort of just reflecting on that a little bit. I mean, BlackRock is such a small part of our overall investment portfolio that it's unlikely to move the aggregate numbers in our investment portfolio. So I would have thought that even if as a manager they were relatively high, which as we pointed out, we don't know, it wouldn't move the aggregate numbers at all. But Jonathan, I don't know if you can confirm that.
Oh, yeah, yes. So no, basically this product is, again, it's 90% bonds, but it's mainly global bonds. So the exposure will be relatively low anyway, because they don't, globally, there are a lot more different corporate bonds out there. So the exposure will be very, very small.
Thank you.
Of the sort of sin sectors, if you like.
Yeah, can you hear me?
Yes.
Yes, just.
I took the NA as not applicable, or rather than not available. Sorry. So I do tend to agree with Stuart, and we've got principle in place that we do need to know this sort of information. And if BlackRock is such a small contingent of or part of our portfolio, does that make it okay not to have it? Because they can't give us that assurity that that they can be within our SIPO.
They're there for diversification reasons, and they are actually a very valuable diversifier in that sense. What I'd like to suggest, Penny, if I may, is that we'll try a lot harder. As I say, it's difficult. They used to have a roadshow, and this particular manager's been to Auckland a couple of times, but of course that's nothing's happened for the last 2 years. So let me see if I can't find another way of communicating with this massive empire and make some progress.
Thank you. So on Stuart's point, I know you're coming to you, Jack, that personally, if I have to stand up and justify, I believe we've been given the information to justify that what we're doing and that we are reducing it, doing our best, and that it has improved over time, over the last few years, especially, and it's going down all the time. And if we take Jonathan's point regarding diversification, I think that's a very valid point, that we've got to keep them on board even in a minor way because of the size of that fund. Okay, Jack, did you have a question?
Yeah, just a little matter. If our SIPO demands transparency, then we're going to have to demand transparency. I don't get a sense that they're actively withholding information from us. It's just that basically because of lockdown, we haven't been able to have a decent conversation with them. But I guess, Jonathan, if you say, well, we don't want this to get to a reputational risk kind of level, and it would be really nice if you could provide us with that information. I'm sure you could find the right terms. Otherwise, if they're not going to be transparent, then we're really left with no other recourse other than to sell down or sell out.
So I guess, Jack, I just come back to my point that the diversification is important, and I think they are making an effort. Jonathan understands what position we are, but I do think we need to retain the fund managers or the funding group that he commented
That would
on.
introduce the concept of we can break the SIPO as long as it's only a little bit. No, I'm a bit uneasy about that. I think if you make rules, you should adhere to them. I know BlackRock's a great investment destination. They've got a hell of a good name. But, if they're only a very small part of our business, I'm sure they'll comply, actually. I'd be pretty confident that they would comply with our request. And if they don't, then I'd say, well, sorry, you've got to have your principles.
So, Jonathan, you're happy with what we've talked about?
Yes, I am, Rick. Thank you. Yeah. No, it's one of these very delicate things where effectively, if we'd had this SIPO in place before we hired them, we would have established this from the outset. But the people that we were dealing with and negotiating with have left. And as I say, I can't actually get to anyone. I mean, they don't have anybody representing BlackRock in New Zealand anymore. It's one of these awkward quirks that even though they run, I think it's about $9 trillion or some absolutely astronomical sum. And they've just been hired by AMP Capital to run their passive products here. We haven't got real live people to talk to, as Jack said. But that's no excuse. Let us see if we can't chase them up and get something for you in January next year when the 31 December report comes through.
Not going to have much leverage, are they? The size of us and the size of them. So
that's the point, Jack. They're running a business in the same way that you are on the council.
We'll move on. Thank you. So all those in favour, please. or sorry, all those against, I'll ask for it. No, nobody's against. So moving on to 5.3, performance accounts of externally managed funds, page 22. I'll move that. Can I have a seconder, please? Penny, thank you. Right, Jonathan. So we're on page 22. Yep.
Sorry, now what part of our reports are we on to now, Rick?
We're on to your performance of councils externally managed funds, item 5.3.
Good.
Well, actually, Jonathan, we are going to introduce the other paper as 5.4 on NIWA, so we can leave that till then.
Leave that till then. Good. I think now I'm sure everybody's had a chance to read the papers, and to be fair, the results are spectacular, and you should be extremely satisfied with how this committee and management have been working to manage both the long-term fund and the short-term fund. The returns are superb, and I say that because we've got over 50 clients that we do the reporting for, and you're coming in, the long-term fund's coming in third out of 50. So in that sense, the strategy that you've adopted and that the SIPO documents, and the managers that we've got and retained, and the way we have been doing the rebalancing over time, have all contributed to this performance. Now, there's an old saying in investment circles that past performance is no guarantee of future returns. And I don't say that lightly, because we are just entering in. We've actually been in this tricky period for almost 2 months now. We're just entering into an extremely tricky period in terms of the way financial markets have been going and are likely to go in this current council's financial year. Now, Penny and Rick and Malcolm are used to me being all doom and gloom. And I actually have some clients who tease me and say, I'm Dr. Doom. Well, that actually is another economist. I'm not an economist, I'm an investment consultant. But I am watching the markets with fascination and a little bit of trepidation, because I was on a call to another organization this morning, and I was summarizing the state of the financial markets, and I said, it's horrible. And I said, that's a technical term. But the point is, you've got stock markets at record highs, interest rates that were at record lows that have just started to go up, and central banks talking about inflation and tapering, in other words, cutting back on their printing of money. And of course, you've got the Delta variant and effectively a lot of supply chain disruptions, which are causing the inflation to some extent, but are also part of COVID and ships not being able to swap crews and function efficiently. So in that sense, the state of the global economy is actually looking very good. And the state of financial markets to date has been extremely good as well. And I'm not suggesting that they're about to turn to custard, but I am saying there is a risk that they do. Now, there's always a risk. Financial markets go up and down, but in that sense, we're very happy with the way the funds have been going and have actually gone this month as well. There's just been a bit of a sell-off overnight, and there was a correction last week of 5% in the US markets. But that was actually a healthy correction, and the markets were stronger and more resilient after that. And now we've had another little sell-off, which is absolutely normal because this is September, and September and October are the toughest months for markets traditionally. And that is likely to be the case this year. But as I say, everything is working very well to date. So happy to let the numbers speak for themselves and answer any questions.
Jonathan, I always look forward to your report as well as your verbal report. It's great. Right, do we have any questions? Jack?
I've just got a technical question, Jonathan. You talk about, was it Schroders being at 7.6 something, and it's above our 5% ceiling. That's fine. I see you're going to be requesting us to raise that ceiling. How do we arrive at those percentages, those limits? What's the process for arriving at that?
So we effectively set parameters that we recommend to management, who then refer to council for sign-off. And what we're trying to do is pick a whole range of different style of managers who invest in different parts of the global economy. So some are investing in global shares, some are investing in Australasian shares, and some, as we've just discussed, Key Street, they're investing in Powerco and Z Energy bonds, which nobody offshore would even touch, obviously. So we try and spread the risks as widely as possible. And then depending on the nature of the way they protect capital and generate returns, we either give them a bigger stake or a smaller stake. And if they've got a bigger stake, we give them wider ranges around that. So a really good manager would have a wider range than a weaker manager. Yeah, and if they
I understand all that, that's fine. I guess I didn't frame my question very well. The question I should have been was, the agreement on those percentage limits is actually agreed to by council, is that right? By us, client? Yes. Okay. Yep, thank you. I understand the principles of it. I just wanted to know who actually makes that decision, and that's us. Thank you.
Yeah, no, in that sense, Jack, I don't want to scare you or anything, but the council is the fiduciary of this fund. So we give advice to management, and then we speak to council when we can. And this subcommittee basically tells council what they think should happen. And normally council signs off on it, but the council is the governing body.
Thank you. Stuart?
Jonathan, I'm really, and I sort of mentioned in a text to you this morning, I'm really keen to hear your views on global inflation, and in particular New Zealand and the outlook. I mean, we've seen headline inflation around the world move up to the highest levels in over 10 years. So we've got the US sitting there at 5.3, Europe at 3, Germany, who despise inflation, at 3.9, even ourselves having moved up to 3.3. Now, there's a lot of talk out there with the central bankers saying it's transitory, and maybe they're right, maybe they're wrong, but what's your view on this at the moment, and in particular, how it might shift the behaviour of the investment community, because the investment community globally has pretty much had 10 years of a benign, almost no inflation issues in relation to being able to meet their benchmark objectives of outperforming inflation in terms of the returns. So I'm just really interested. I think this is, one of those big turning points, and I'd just be interested in your views on that.
Yeah, I think it's actually very simple, because initially the only target that the RBNZ had when the bank, that act was set in 1991, was to monitor inflation. But that has changed a lot now. The RBNZ has also got to look at the state of the labour market and the state of the housing market and protect the financial security of banks. And this same spread of responsibilities and dilution of the focus of the policy decisions that they're supposed to make has happened in the US. I mean, it's still the legal requirement of the Federal Reserve is to look at their US domestic economy. But 3 years ago, when Janet Yellen was the chair of the Federal Reserve, Christine Lagarde rang her up and said, please don't raise interest rates because it would damage the European economy. And she didn't. And this is part of it's a global thing. And inflation is very simple. At the moment, the central banks think it's temporary because a lot of it is caused by supply chain disruptions and shortages, which when there's shortages, people who've got money, they're happy to pay more. I was commiserating with one client yesterday who wanted to spend $7 on a Lindt chocolate bar, and his wife ticked him off. And I said, well, look, I have to buy my wife's chocolate at Countdown and I have to pay full price for it. I can't wait till it goes on discount. And we just pay it because, and what's happened is that a whole lot of shortages, and the main one is computer chips, which 50% more are made in Taiwan. Taiwan's got a water shortage. They can't make enough chips. As a result, the auto industry can't make enough new cars. So the price of old cars or used cars has gone up a lot. And of course, used cars are something that most people need if they can't get a new one. And we're having the same thing here where everybody's buying gas guzzlers before we get these EV price changes and taxes on gas guzzlers. So in that sense, the key function is the fact that in a lot of countries now, because of COVID, there are labour shortages. So for the first time in over a decade, it's actually more like 12 years, Stuart, or 15, there are now skill shortages and wage pressure coming through in some countries, in some parts of the economy. And as such, you're getting more types of inflation, not just supply shortages, but also margins being squeezed and some businesses having to put up their prices to effectively continue in business. So for those reasons, inflation is starting to happen, but that hasn't changed central banks' approaches to printing money yet. So as you say, the standard response is, oh, inflation's temporary. Now, I personally think that Mr. Powell is a liar if he says he thinks it's temporary. Because I've been around a very long time. I mean, I remember when inflation in New Zealand was over 20%.
Yep.
And, I've never seen any prices go down. And, I mean, I used to get a Cadbury's bar of chocolate for 250 grams. Now it's 180 grams. Price is the same, but the size of the bar is smaller. And in that sense, there are a lot of shortages and food shortages. So inflation is real at the moment, but the question is how long it's going to last. And I think because COVID is going to last longer, inflation's going to last longer. But at the moment, it looks as though the central banks, although the Federal Reserve is now looking to start tapering this year and maybe raise interest rates towards the end of next year. And the RBNZ would have raised rates, last month if the COVID lockdown hadn't occurred, and they will in October. So in that sense, as far as the financial markets go, we think there are two really good things happening. The first is that Adrian Orr and his team are onto it, and they're starting to raise interest rates here already, and the market is responding to that. So as you know, the 10-year New Zealand bond yield today is 2%. Now, a year ago, it was less, it was about 1%. And interestingly, the government issued a 30-year bond the week before last at 2.8% yield.
Yeah.
Now, the Auckland City Council issued also a 30-year bond at 2.85% last year. And there's usually a 35 bps spread between local authority bonds and government bonds. So interest rates are going up. But as long as interest rates go up and the market realizes they're going up and adjusts their expectations of investment returns accordingly, then stability will continue. And you see, the point is that the stock market is very interesting. You've got really big winners and really big losers, depending on how the distribution chain goes. So A2 Milk used to be the largest stock on the New Zealand market. It's dropped to less than a third of what it was at its heyday, was at its peak. And that's simply because they can't get enough tins of milk powder into China, because China's stopping people importing milk powder, and they can't get tourists and Chinese students to take tins of it home with them when they go back for holidays and stuff. So in that sense, we think that in New Zealand, we're actually well placed. The economy, despite the lockdown in Auckland and the constraints on tourism and retail, the economy is actually still functioning at some level. It's not flash. Obviously, we're in recession, but at the moment, things are coping. Now, in the US, you've got the ongoing battle about the debt ceiling. But Jerome Powell's position is absolutely clear. He's just going to be printing money, when he stops printing money, he's not going to raise rates very fast. He's just going to do his 25 bips every meeting, 4 meetings a year, And at the moment, the 10-year yield there is 1.5. Now, a year ago, that was at 50 basis points. So it's gone up 200%, right? Which is astronomical in bond terms, but it's still only 1.5%. And only this week has the US 30-year bond yield got up back over 2%. So the rates are still very, very low. So in that sense, we think that the central banks are going to continue to promote this easy money policy and only gradually tighten, which means that we are going through a bout of inflation. And, I'm still assuming a long-term rate of inflation in New Zealand at 2%, but I'm expecting 3% inflation for the next 3 years at least. Because they're not, but that's right, because you've got this two-tier thing. Now, the other impact on it is the housing market, because house prices are going up all around the world. And the question is whether that creates a shock. So in that sense, the old economic patterns don't apply. And this is the whole point about the combination of the central banks working in concert with the pandemic and governments having to print money as well as central banks. And this is why I say that the outlook is really tricky to try and gauge. But we actually think that right now, the markets are less risky than they were last month or the month before, simply because we've had a little correction and there's some clarity coming into things. Now, and then the main one is, of course, that the CFO of Huawei has been released from Canada in exchange for a couple of Canadian spies, the Chinese call them. But that's a sort of de-escalated part of the geopolitical tension between the US and China. So geopolitical risks have reduced slightly as well. I'm talking a lot, Stuart, but just to try and colour it in for council and everybody on the call, it is going to be a very interesting financial year for this council, but also all investors. And I hope we don't lose too much sleep over it, or too much hair either.
Thank you. So Jonathan, I couldn't help myself, but I know you do talk a lot, but you talk extremely.
Hang on, can you speak up, please?
You do normally talk a lot, so you've definitely spoken up this time, and I'm sure it's to do with the fact that you've had a few weeks pinned up there, so you've got a whole lot of thoughts ready to fire. So, Stuart, does that answer your question?
Oh, I'm sorry, no. It's probably an unfair question because it's quite a big one. But Jonathan, I'm really focused on inflation.
Well, don't be. Forget it. It's not the issue.
No,
the issue is what the central banks are going to do.
Yes, but what I wanted to ask in terms of inflation, that if we get global inflation stickier than what the central banks are wanting to believe it to be, and certainly in New Zealand, you know, I think we'll probably have a long sting in our tail because our supply chain issues aren't going to disappear within 6 to 12 months. But what does that do to the mentality of investors and investment fund managers who have had a decade of pretty easy? You know, they've had every asset that they've invested in has broadly gone up. And I agree with your comments and your fear of where the markets may go and that whole nothing at all. But I'm trying to get a feel for what happens in the biggest framework of things when a fund manager is faced with trying to outperform a benchmark that is moving away from him or her. I mean, we so many of the benchmarks are to get a return over inflation in the respective economies. And if that's happening against a backdrop of volatility around assets, is that compression going to drive a different behaviour by investors that we haven't seen?
It is in some cases. It will affect retail investors enormously, Stuart. But you see, we've selected these managers for council and all our clients on their ability to be disciplined and manage downside protection, right? And we had a perfect example of that in February and March last year, which is why I'm not worried about the risks of inflation and it affecting the behaviour of managers. We saw perfectly well how good the managers were at a 40% correction. Now, certainly some of their objectives have changed, but a lot of them have an objective of cash rate plus something rather than inflation plus something. And as I said in my long answer to your good question, central banks aren't going to put cash rates up a lot in a hurry. They're going to just progressively raise them. So those targets that these managers are managing to aren't going to be stretched. They're more likely to just have to work a little bit harder, but not too much harder. But the managers that we recommend, we talk to regularly, and they're, I can give you an example. Andrew Baskand, who's the managing director of Harbour Asset Management, He's more nervous about the markets than I am, for the first time since I met him 30 years ago. Right?
Look, we're going to have to wind it up, Jonathan. In fact, look, I appreciate the comments from both of you, and Malcolm's got a question. Jack's got a question. Jerome is on the line and he's got a presentation soon, and we've still got to get through NIWA. So sorry about that. I would like to finish it off. Malcolm.
So, Chair, quite a simple one. Jonathan, can you just give us any insights you've got on what's happening in Federated or sorry, I had it here in front. Federation Alternative?
Yes, they are struggling a little bit. You're right, Malcolm. They haven't been performing as well as we'd like. And that's because the renewable energies and the lockdowns in Australia.
Are you able to just send us a little bit of background on what's happening there and what our exposure is still going forward?
Yes. Yeah.
All right. Jack, is this a question on?
Yeah, just a quick one. There's no recommendation in this report from Simon, but on page 27, I see Jonathan says we are recommending a change the upper range for Schroeder's real return. Is that a recommendation you want us to adopt now, or is that something for a future day?
Well,
if so, we need to discuss it.
Jack, if you're willing to.
Well, I think we need to discuss it, don't we?
Yeah.
We're in your hands, Rick.
We're just saying we're not going to discuss it now, if that's all right. Got to go to.
Well, I mean, I'm saying council has to make the decision. So we're saying we're putting this decision back to another day. Is that right?
Yes.
Okay. Thank you.
Okay. Thank you. So, thank you. And look, I'm sorry to cut you short, and I do appreciate Stuart and Jonathan, your comments, and everybody else does. But you know, we've got your report. I think any other questions will have to go through the interested parties, if that's all right. And so I would like to move on. So only one hands up if you don't want to accept that report. Now I've got to explain. Right, we are, which you should have done at the beginning, receiving the tabled item 2.0A, which should have come under 2, which is on the NIWA report. So that is a supplementary item. So can I have a mover for that, please? I'll move that. And seconder, Penny. So all those, anybody against, who accepted that? So we're now going to item 5.4, which is not on your main agenda, but it's a supplementary item. It's page 4 of the supplementary, and it obviously is not listed on the agenda, and it is on the NIWA report. So does everybody have that item in front of them? Transfer of NIWA cash flow from long-term fund. Simon, do you want to speak to that? Your name.
Yep, very quickly. Typically, when we know of a cash flow requirement, whether it be for a capital project or for operational business, we have those funds in the short-term fund because of the lower risk profile associated. The NIWA cash flow, I don't have the agenda in front of me, but the NIWA cash flow has been sort of confirmed for the next 12 months. And when I went to Jonathan to discuss transferring it from the long-term fund, the property reinvestment portion of the long-term fund, into the short-term fund to comply with the protocols that we have in the SIPO, Jonathan said, no, not just yet. And we thought, okay, because we're going away from the protocols in the SIPO, we would have a discussion, and Jonathan could lead it by saying why he doesn't think we should be transferring that money just at this stage. So I'll hand over to Jonathan.
So the key point is that at the moment, the funds are generating good returns, and the long-term fund is outperforming the short-term fund by a significant margin and not taking much more risk to do it. But if we take 6 million out of the long-term fund, we will be forced to sell down some Australian assets at a time when the Australian dollar is very close to its highest ever. Now, it has actually dropped a cent this week. It was at 97 cents and it's now down to 96 cents today. But that's still an actual realized exchange rate loss. The other main point is that you're going to get significant distributions of cash from your private equity in the next 3 months. And that could well fund a large chunk of the NIWA requirement. But then the third thing is that you're selling your Kensington apartments, and that also is going to realize a big chunk of assets. And what we're saying is if you treat these assets like trading assets and go in and out of the market, you're going to damage the overall return that you achieve. Now, as I said to Jack, it's your money, you take the decision, but our advice is to fund the NIWA money progressively out of cash flow rather than at this point, this exact point in time, realize another $6 million.
Oh, Chair, so I mean, just looking at page, well, it's the one with the table on it at the end. I mean, I think that there's a lot of merit in what Jonathan says. I'd be quite happy if we took the decision just to move the $210,000 out that we need in the next 60 days, and then review this at next month's meeting again, and just keep, because one of the issues is that we're not absolutely certain on when the Kensington money is going to come through, but once we've got certainty about that, then we can make decisions. Yep. But if we could just do this on a month-by-month basis, and each month we'd be looking at the new month that's added being 3 months out, so that we're effectively holding 3 months in the short-term fund, you know, in which case all of these other things, there'll be greater certainty around them, both in terms of distributions and in terms of the income from Kensington.
Okay, so that's the recommendation. I don't think we need to move.
Can't hear you in
Sorry,
chambers. Yep.
to turn myself on. I'm deliberately turning myself off so you can't hear half the stuff I say to Bruce and Malcolm, all right? So we're not having a motion, we're just minuting that we're making that money available at 210,000 this month, and then we'll review it next month as well as we go, as Jonathan has suggested. Is that clear, Penny? So
when you say next month, that will be the management meeting next month, not the property and investment meeting, eh?
We have a we have a you were talking about when we have our get together, Malcolm, aren't we?
Yeah, Chair, I mean, I suppose what I'm suggesting, because the December payment is just shy of $1 million, and if that comes, if we don't get an alternative source of cash, then we're going to need that. So even if we had to call a special meeting in a month's time just to confirm that, then, but at least we can get a bit more certainty around the distributions and when the Kensington money is coming in before we go and break the investments that we've got at the moment.
So Penny, we have a Chair's investment meeting on the 22nd of October. That's what we're talking about.
Yeah, that's fine. So I'm just wanting to check also that it is okay just to minute that. We don't have to have a move a second.
I don't think we need a motion, do we? We can minute that. Bruce and
Yeah,
Malcolm.
Chair, I mean, essentially, it's just been the practice that we're changing, and we just want to get an indication that there's a reasonable degree of comfort from council that we change that practice.
Yeah, that's fine.
Okay, I'm happy with
Can
that.
I- Sorry, may I just ask one request?
Who's the question for, Stuart?
Oh, it's actually, could I just ask, please, that management, Bruce and Malcolm, when you're preparing those cash flows and those forecasts for NIWA, can you also please take into consideration the significant net amounts that look to be coming through in 2021 on private equity calls?
Yes, and I think, Stuart, that's the issue, is we don't have certainty about when those are going to come through.
Yeah, but they certainly exceed the level of distributions.
With respect, Stuart, I happen to know that there are going to be at least 3 major distributions from Continuity Capital in the next month and a half, depending on OIO approval for deals that have already been done, but just subject to OIO approval. So you're actually going to get a distribution from Continuity Capital next week in respect of a settlement that's going to be made tomorrow because OIO approval came through just the day before yesterday. So in that sense, yes, there are some heavy private equity calls coming, although several of those have been made already. Continuity Capital ones, we've just had some. But the distributions are going to be coming, in our view, faster and bigger than the calls for the rest of this calendar year.
Right, thank you.
So, Chief, so Stuart, absolutely give you the comfort. We will build in all the information we have. I suppose it's just the, we just want to acknowledge that there is a certain degree of information that we don't have yet, but as that comes in, we'll build it into the model.
Right, thank you. So just to confirm, Penny, we are minuting that. It's not a separate motion, okay? And we have that meeting on the 22nd of October. Okay. Oh, Penny. Oh,
Sorry, now that we've finished
Penny.
that one, can I just go back to the point that Jack made? I just want to check about the recommendation that was at the bottom of 5.3. Is that what you're talking about, Jack, on page 23? About Schroeder's and going up 10%?
Well, yes, it was, because there's no recommendation at the top of the report, but Jonathan was recommending that we raise the ceiling for.
No, I'm just going to say that that's already been done. That was done in September.
That was approved at the last meeting, Jack.
Oh, sorry. Oh, I'm glad I checked.
Okay.
Thank you.
Thank you. Okay. Right. Thanks for that. Thanks, everybody. I think we're finished. Anybody against receiving that report on there? Okay. Thank you. And thanks, Jonathan, again. Always interesting. I borrowed on a property in 1987, 22.5% was the mortgage.
Yeah, much more reasonable now. Thanks, everyone.
Thank you. Right. We are moving out of public now. Can I have a mover? I'll move that. Can I have a second, Penny? Thank you.